Okay, beautiful. So we're all welcome once again, and today we want to look at how to determine our higher lows and lower highs. Remember, we said that market moves in one of three ways. It's either it's moving up. Where is my? Okay, let me get this. Okay, it's either moving up. Let's make that. Okay, good. It's either moving up or moving down, or it's moving sideways. Okay, so and we said that as market is moving, it also gives us what we call a wave. So it gives us a high and then a higher low there, and then a higher high, and then another higher low. This is for the uptrend now. Okay, and then a higher high. Okay, so what we want to determine today, we've looked at a number of setups, but what we want to determine today is that this higher low, this higher low here, at what stage do we say it is no longer a higher low and that it is now a break of structure to the opposite side? More like saying, is it a possible reversal that's coming up? Okay, so we want to determine when will this occur. Okay, and usually this occurs, so if we just draw that typical wave again, usually this occurs if, so let's say on this wave now, when this wave starts coming down, by the time it breaks this last structure here, then that becomes a break of structure, or some people will call it a chalk, that's change of character. All those are just different nomenclature. Just know that it's a break of structure or a trend change or whatever you want to call it, but it's a break. All right. Now, so in determining these as well, we want to be able to know what caused the last push up. Okay, so in that range, we also know that. So if I go through it quickly now, from our last slides, we talked about bullish engulfing candles, kangaroo tails, and dojis, right? We talked about those three various setups for us to know when a market wants to begin to turn. So in our uptrend, we want to know when market is beginning to turn here, or when it's beginning to turn here. We see things like these setups coming up, right? Okay, so we want to put all those three together now, all those setups together to see how the market really is. So, so we talked about what we call valid ranges. Okay, so we must have a valid range, and all that we mean is that, so between this high and this low here, so price started from somewhere here. So in an uptrend, price started from somewhere here and then pushed all the way up. So between this high here and this low here, that is our range. Okay, so that is what we're looking at as our range. And that implies that as long as price does not come and break this range here, we are still in an upward direction, upward move, so uptrend. Now, once price comes down and then starts moving up, it forms another range. So this then becomes the next range. So we're looking for that valid range. And usually in an uptrend, what we look for, so one of the other things we said, so let me quickly go to that slide now. One of the other things we said is that, like we said here, we need an opposite candle. Okay, we need an opposite candle, and then we need, where is that slide? Let me go to that slide quickly so we can see it. Okay, good. So this is it. So we need to have a valid range, we need an opposite candle and a pullback candle. So we said once that price is moving up, as long as this pullback candle and this opposite candle, as long as it does not close above the last high, in an uptrend. That gives it that pullback candle. And then if this is our higher low here, as long as this price does not come all the way down and break this level here, we are in an uptrend. So we can enter for longs, enter for longs here, enter for longs here. As long as we don't break this last structure, this is our valid range between this high and this high. That is our valid range. And price can do 10%, can do 50%, can do 618.5 or whatever percentage it is, and then continue upwards. Okay, we already know all this one. So we're going to look at that on the charts as well. So just like we said, we need to have an opposite candle, we need to have a pullback candle, and then we can determine, depending on the time chart, if we're on the 15 minutes chart, I usually use, sometimes I use one, sometimes I use two candles to determine the number of pullbacks I need. And you know, this framework we're giving us is just a framework for us to use, so that we can have a point of reference for us when we are trading, so we can know what we're looking for. So I have a trend, what's this chart now? This is the pound Aussie chart. We can see a nice movement to the upside. So it started at let's say it started down here and it's moved. So you can physically see this. You can see all this movement. All right, you can see all this movement. So it's in an uptrend. If you ask your 5-year-old or 6-year-old, you can see that between this level here and this top here, it is moving up. Right. So what we want to now determine is where are the points? Where are the higher point, the higher lows and the lower lows? Where are they? So let me increase this a bit and then come here now. So we're going to start manually and just look at that. So when you look at this from these lows here, price pushed up with this opposite candle now. This is a different kind of candle from the bullish ones here, and then it doesn't close above that high. So this is a valid pullback. Okay, and then it goes up. It doesn't come out to take out this low. It goes up again a bit, pulls back, but this high here is still intact. Goes all the way up to break this level here, pulls back a little bit, and then goes up. Right? So now it is left to you to then decide that where is my higher low? Is my higher low here? Well, that's up to you to decide. So if you ask yourself, what was the last set of candles where you had your last set of pullbacks before this pullback from this level now, between here and here? Where was your last pullback? You can say it's here and you can say it's here. It is dependent on you, right? So if we choose this first one, for instance, so as soon as price comes in here, you then begin to say, okay, price has moved up all this way and it has come back down all the way to the support line here. Okay, then you can give it another leg to say that, okay, I'll only start considering a reversal if I see a break below and a close below, right? I'll say I'll only take a trade. I'll only begin to consider this trade as a reversal when I see a break and close below this low. Okay, so price comes all the way to the low, and you know, some of these things, there are things we call liquidities. Okay, it is all discussed in the on the school platform where my mentor discusses all this. So all this is just like a revision. So there is liquidity. Sometimes price will come in, take out liquidity, and then push up, just like he's done here. Okay, but when liquidity is being taken, we won't know until price takes out the other side of the setup. Okay, so now, so if we agree that, okay, we're going to go all the way to the top here, we'll take these ones that are just minor structures. Okay, and then take this one as the major pullback. Take this as our structure higher low. Okay, so once price starts moving up, and you can see this now, this is the 15 minutes chart. Okay, you can see this. Look at this nice right here. You had an engulfing candle here, you have another engulfing candle here. So these things reoccur over and over and over again, right? So so you take this candle, the price pushes up, comes back down. Right. Once you see this bullish engulfing candle, you see some bullishness there. You see that is this support here is holding. Okay, so you can then say to yourself confidently that if I enter a buy around here, I can expect my first take profit level to be at the tip here. Either, well, you can take this or take this. Let's just take this one because it actually takes the two of them. So once you enter your buy, you can safely put your stop loss down at the lows here. Okay, or if you want to give it some breathing room, you can put it all the way down there. Okay, and then you go take your first take profit there, and then leave the remaining to run. Right, so now the next set is that once we have this and then it's done, this is now gone up all the way to this level. Now we're using hindsight now, just so we're going to practice this individually when we get to our charts. Okay, so once it gets to the high here, and then it begins to give us a valid pullback. So you can see this is the last valid pullback here between here and these candles here. So as long as it's pushing down here, a professional trader won't begin to say that, oh, trade is the price is reversing. It's not reversing yet. It's only giving us a pullback. Okay, it's only giving us a retracement, a pullback for possible push up again. So you just ask yourself, what is the last? So from this level here now, if you ask yourself, when you look backwards to this side here now, you say, where is the last candle, or where's the last set of candles that caused price to push up like this? You can say safely that it is this level here, this set of candles here. This is where the push started from. Okay, and then once it gets here, it pushes back. So anywhere between these lows here, you can begin to enter your buys. You can begin to enter your buys. We put your stop loss safely down there, and then expect price. So it's all a probability. So you're expecting price to then push up from this. As long as it does not go below this level here, then you can say, I'm expecting a push up, and then it does that. And then once it pushes up, your first target is the last high that it created. That's your first target. And then it safely gets there, right? So now let's look at what price did. If we then go, I want to see if this eventually, okay, it keeps going up. So it keeps going up. So it pushes down, pulls up again, pushes up, breaks above this level. Look at this very nicely. It keeps obeying that structure. Look at, if you ask yourself, between this range here, this is the last valid range, between this push up and this push down, once it begins to push down like this, you have opportunity to enter your buys again, because your stop loss is, this is where your structure is, right? Your structure is at this low. You will say that as long as it does not break below this level here, below this last level here, I'm still in a buy. Okay, though we have in your advanced level, we have some people who would start taking sales from here. We are not doing that right now. We are not in the advanced. We are just building it up. Okay, you will learn all that when you go through the class. Okay, but so for now, just know that we are following the trend. So we are following the trend. So we want to see, when will this thing actually then change? So we're doing higher lows here, higher highs, higher lows, higher highs, higher lows. Then it keeps going up. So look at this one now. So sometimes it will pull, it will give you a deep pullback. Sometimes it will give you a shallow pullback, right? So look at this now. I want to see, where does it actually change direction? Oh, beautiful. Now look at this. So price pushes up from this level here, pushes all the way up, right? So they say the trend is your friend until it's no longer your until it takes you out on your buys or on your sells. So look at this, it begins to come down. So you are in your frame of reference is that this price is still pushing up even when it gets here. So all these levels here, you're looking for buys here, all these levels here, until it gets to that valid, until it invalidates your last valid push up, until it invalidates it. That's the only way. When you consistently take your price action that way, right? So if I redraw this, all this push up that we had now, if I redraw that, let me see, where is this now? Okay. So we can see, I want to reduce it so we can see it very well. Okay, good. So we can see price pushed up, pull back, pushed up, pull back, pushed up, pull back, pushed up, pull back a little bit, pushed up again, then went sideways for a little while, came down. It did not take out this last low, went all the way up, right? So as soon as price then closes below this level here, at this point here, then we can see there's a change of trend. All right. So that is how when we see something like this, when we see professionals telling us price is making higher highs, higher lows, as soon as it then breaks the last structure, we can then begin to say price is changing direction. Right. And then once it changes direction, what do you expect? You expect some sort of pullback and then continuation, pullback and then continuation that way. And that is what you have here. You see this small, this is a tiny pullback there. Let me expand this a bit now. Where is that? And let me remove all these drawings. Want to get to that level. Okay. So you see tiny pullbacks. So this is our line here. So you see this, there's a tiny wick there, or kangaroo tail. Okay, there's a tiny kangaroo tail, and then it pulls back, pulls up again, pulls back, and then gives us a proper, all those ones are minor pullbacks, okay? So the proper pullback then comes up down here. Once it gets down to this level here, it then gives us a bigger pullback. But even at that, even at this bigger pullback, by the time you do your valid range, by the time we look at this valid range structure, okay, we'll now say to ourselves that from this level here, okay, once price is pushing down, you know, coming all the way down, had some, it stalled a bit here, pushed down. So between this level here, you can see what is happening here now. Let me remove that. Okay, so you see a nice push down here, and then look at this. So if you ask yourself, when price got here, when price got to this low here, your last valid range, what was the last valid range? The last valid range will be between this low here and this last high here. Okay, that will be our last valid range, because you have a pullback candle in between. When price came all the way down, so you see pullback candle, it pushed down, pullback candle, then it pushed down. So if we use this pullback candle here as our last valid range, that means as soon as we get a break above this level here, then we have a change of trend, or we have a break of structure. And then you can then enter your buy for this quick one here, and then you put your structure there. So then price then continues to do that, and then you go all the way and you see what price does. Okay, let's look at another pair, pound JPY. I think I saw something earlier. Okay, let's look at a downtrend for now. I want to get a downtrend. Okay, let's look at this downtrend. So price from this level here, at this stage is not yet officially, if we're using the structure that we talked about, the valid range structure, which is on the school platform that we've been asked to go through. Okay, our valid range, when the question you ask yourself is what caused this push up? Where is the last range? So it's between this top here and this low here. So you then wait, this overlaps to the following day. So price just meanders and goes all the way down. So once it then breaks below it here, then you begin to say that, okay, I'm looking for sells now. On your pullback, you then begin to sell. Pull back, you sell. Okay, you then sell all the way until you get to, where is it now? Good, look at this. So this is the last, okay, this one is lower than this low here. So this is the last low. If you ask yourself what caused price to push, what pushed price down here? What was the last, where is the last opposite candle? Is at this level here. This is the last opposite candle before this push down, right? So you then take this high as your last valid range. So as soon as price closes above it, then you have a change of trend. Okay, and just like with every other system, every other process that you have, there's none that gives you 100% guarantee. There will be occasions where, yes, it will give you a valid change of structure. It will give you a valid not change of structure, break of structure. However, price will not go that far. It will come back in and change direction again, just like we have in here. But it doesn't always happen that way. That's why they say the trend is your friend. Once the trend starts, it actually moves very nicely. Okay, you can see this, can see all this price movement here. You can begin to detect what is happening, right? Let me see. There was I'll give us one more example on gold. That was today. What's happening to my gold? XAU USD. Okay, so gold was a bit tricky today, but if you look at it, remember what I said before, and I think I mentioned in one of my uploads on my YouTube page. There are three main questions you must ask yourself once you start trading. Once you get your table, your trading desk. The first question is, what did price do overnight? The second question is, where is price now? And then the third question is, what must I see price do before I take a trade? So when I got to the charts, I looked at this and I thought, okay, price started from somewhere down here. You see this nice big candle there. It then went all the way and broke that high there. So it started from here, got here, it had a pullback, broke this structure. So as soon as it breaks this structure, I know that it has possibility to go up, right? So I had a buy or so somewhere there, and then I put my stop loss way down there. Okay. Now, if you look at the tricky part in this one, because this one is a bit more advanced, the tricky part is that within here, price then gave us, when price came all the way up to this level here, it then gave us a quick change of trend, because this last push up here, if we use just one candle, you see that it broke it here, okay, came down, broke this level, went further down, then came all the way up, right? To do what we say, the professionals will say it takes liquidity. It took out liquidity here and then came back all the way down, right? But in my own mind, my own structure that I was using was something like this. So if we look at this, so price pushed up, came down, pushed all the way up, right? Pushed down, went up, came down to take out some liquidity here. My stop loss was still okay. Then as soon as it got back to this level here, I just closed it out. All right, I just closed it out because I thought, okay, price was not, it was not strong enough. But if you go to the higher time frame, you will even see it has given you some clues. When you go to the higher time frame, that it has given you like 4 hours, for instance, you can see these nice big bearish candles. So the sellers are still very, very much in play. All right. So by the time you're looking at just the 15 minutes setup is a micro of the bigger thing. Right. So I hope this gives us some inkling into what is on that platform. Is a free teaching that my mentor has given us. It's a full trading course. He discusses this valid ranges and how to get them, discusses it in full details. I've just shown us practically how I use it every day on the lower time frame. Okay, because I trade mainly on the 15 minutes time frame. So this is how it works, and it works when you look at it, when you do this process consistently, then you have a framework. It's not that today you use valid range, tomorrow you use MACD, next tomorrow you use moving average, then another day you use Bollinger Band. It will get confusing. Just use one system, because all system works. All trading systems, they work if you just follow the process. If you follow the process, and the whole thing is that once you can make say $1, that gives you possibility that you can make $10 tomorrow. That gives you possibility that you can make 1,000 next tomorrow. That gives you possibility that you can make 1,000,000 in some days. I say in some days, in a few years, right? But it has that potential. Once you can place a trade and it gives you some profits, then that means that system can work. All right, so that is it for today. Do we have questions? Questions? The pound Aussie today was actually I wanted to trade it, but it was very tricky today. AUD. Today you can see how the whole thing is for pound Aussie today on the 15 minutes. Look at how it is. The whole day. Look, I went all the way up, then came back down. It didn't even I wanted to take a buy here, but I wasn't sure of that buy because I wasn't confident, because it just took a long time for it to go up, and then once it came back up, look, I came back, so it's in a big range. But if you look at it overall, look, it's been giving some nice up moves here, started coming down, a pullback, came back down, went up. So it's been giving it some. It's just in a range now. It's in a ranging situation right now. Okay, so by the time you spend more hours in front of your charts, you begin to get a feel for how these prices are likely to move, where they're likely to move to. And once you use your valid range and you ask yourself those questions, what did price do overnight? Where is price now? And what must I see price do before I take a trade? So if you ask your first question, what did price do overnight? You say, is it trending or is it ranging? You answer your question. So like, for instance, now on the gold trade, once I got to the gold trade, I asked myself, now I saw that price was coming down, but I just focused on the Asia session. I just said, what is price doing? At the time I was looking at it, it just broke this level here. So I said, it's in a beginning phase of a possible trend upwards. So that was my own mindset, that okay, it's in a trend, is beginning to do a trend because it just broke the last structure. Then I said, what must I see price do before I take a trade? I said to myself that, okay, I want price to pull back. And indeed, did I get a pullback? Yes, I got a pullback. So once I got this pullback, I then entered. And then I said to myself, where would I put my stop loss? My stop loss could either be down here or down at the very lows here. So that is all the discretionary part of it. Okay. So price did eventually come all the way down here, and then before it went back up. You see? So those are the kind of things you always ask yourself. If you do that consistently, then you get your consistent results. All right, so that wraps up this aspect of price movements. I've not seen no question in the charts, and nobody is raising their hands for questions. Is that all clear? Okay.
Good evening, sir.
Hey, good evening.
My name is Sandra. I'm calling from Asaba. Thank you very much for the teaching once again.
Thank you, sir.
What happens to your trade when is it the candle, this candle passes the stop loss? What happens to your trade?
It will be stopped out. That means
Okay.
if so like in this case now, what I said was that I put my stop loss way down there somewhere down there. Let me even see if I can get that trade for us so we can just see it. Okay. So it just show us. So this is okay. Oh, right. No, okay. Well, this is the other chart. I've okay. My other main account. This one is not the main account. It's the other account that actually I took that trade. But you can see a sample of this is the second trade I took. With this one now, I put my stop loss down there and I was looking for price. So once it just broke it there, price came all the way down. I entered somewhere there and it went down. But if I didn't close my, if I didn't do my take profit there and this price came all the way down, if it came all the way down, it will have just stopped me out and that would be a loss. Okay, which is okay because this business is a business of probabilities. You will get some wins, you will get some losses. It's fine. But the main thing for you is that you want to have the wins you want to have more wins. So if you are getting, how do I describe this now? If you are getting, say, out of 10 trades, if you're able to win, let's say 7 trades, that's excellent. That's very good. But there are some systems that you only need to win 3 trades out of 10 trades and you'll be okay. All right. That means you go for more, your profit target will be higher. So you'll be going for maybe 1 for 3, 1 for 4, 1 for 5, something like that. But the ones that are doing just 1 for 1 and co, those ones you can have very high win rate for those ones. Okay, but generally, if it takes your stop loss out, then you're out of the game. So for me as well, I just said to myself that if price, like when I entered here on the main account, if price came back and took this one out, if price came all the way down and took it out, then I'm no longer interested in that buy because this support that is supposed to be here was not able to hold the price from going all the way down. I hope that answers the question.
Yeah, but what I'm trying, when it goes down and
Yeah.
it keeps going.
Oh dear, I can't hear you again. No.
This your stop loss now. Is this twice what I'm asking? Can you hear me now?
Yes, I can hear you now.
Okay, I said that's your stop loss line. When the trade start going down and
Yes.
it passes that your stop loss and it's still going down, will you still keep on losing
Yeah.
losing
So
your?
exactly. So I will have lost. So if I had one lot in here, for instance, and this was where my stop loss is. Once price comes here and takes it out and keeps going down, once it gets here, I'm not it then stops me out. I'm taking out already. So if it's $1,000, that means I will have lost $1,000. If it's $10, that means I will have lost $10. If it's $1, that means I will have lost $1. That's what
Okay,
it means.
okay,
Yes.
okay.
But it's always good to put in your stop loss because you never know nobody on this earth knows what the market will do. You can only hyphenate and say it is the likelihood of something happening, the probability of something happening as against the other is higher. You can only do a probability game or a probability business as it were. All right. You just say the likelihood of price coming all the way and going back up is possible. And also the likelihood of the price coming all the way down. Once it breaks our support here, then I'm no longer interested in the buy. That means I'm going to take a loss for that trade.
Okay, I got to know.
Wonderful. That's
Thanks
an
for that.
excellent question. Well done. Thank you. Okay, do you have any other question? Okay, to know somebody, billionaire Michael Yemi asked, how do we know how to risk? So it depends on your account or the type of account. Okay, so there are calculators, what they call market calculators. I don't know if I have enough time for this one now. FX, sorry. Oh, crumbs. I can't find my FX, my FX something. My FX calculator, this compounding calculator, my FX position size calculator. Okay, so you need to know the pips. I'll post this on our platform. You need to know the number of pips. You need to know the it will tell you the lot size that you need to use. Oh, this thing is not coming up. Oh. But it's called the position size calculator. So you just use it to determine, let me see, I hope it will come up. Use it to determine so once I know, so for instance, where is this thing now? So for instance, this price here that I entered. So I entered here, my stop loss was at 601 or 61 pips. Right? So at that, I'll go to that calculator, that position size calculator, and then put in. So this is for gold, XAUUSD for gold. I'll put in the account size. So if my account size is $1,000, for instance, okay, I'll then put in. I want to risk, let's say, 2% of my account. The stop loss is 661, right? I'll just press calculate, and the thing will tell me how many lot size I should put. So it's telling me to use 0.03, right? This is one method. Another method is that there are tools that we use. There are other tools that we use. I have another tool that I use here that calculates it automatically for me. Okay, but that's for those of us in my class, in my own mentoring class, right? So, but there are tools that are available for you to just calculate, to use it very easily. Okay, do you have any other question? I'll put the link for that free one there on the platform so we can use that. Okay, wonderful. So I hope you go back to the class and go through those the school platform, go and learn this valid range very well, learn market structure, and be able to get a good grips of how to trade. You can know what is happening for each of your trade setups. Okay, with that being said, thank you very much for creating time to join us. I'll hopefully post this on the YouTube channel so we can all visit it again. Thank you very much and have a very good evening.